Hey everyone, welcome back to Republic Labs. It's David here, and today we'll be talking about the year 2026. So the year 2025 has ended with Bitcoin underperforming gold, and the question now is, will 2026 bring a new hope for us to look forward to? And so let's talk about a lot of things. Venezuela, macro update, Bitcoin analysis, the lighter TGE, and Monad at the start of 2026. Let's go. So as you may have heard, the US invaded Venezuela over the weekend, and the argument is that this is a strategic move by the Trump administration to crush energy inflation. By securing access to Venezuelan oil, Trump can lower domestic gasoline prices, which provides the political cover needed to aggressively print money and expand credit to pump the US economy without alienating the median voter before the 2026 and 2028 elections. Historical data suggests that if gasoline prices rise more than 10% in the months leading up to an election, the incumbent party loses. Controlling Venezuelan oil is an attempt to artificially keep gas prices low. With energy costs suppressed, the administration can run the economy hot through deficit spending and money printing, and the Treasury issues debt, the Fed prints money to buy that debt. And Bitcoin is that ultimate hedge against this expansion of fiat liquidity. As the supply of dollars increases to fund this economic pump, Bitcoin's price is expected to skyrocket. And nothing stops the fiscal dominance train, and if anything, there are more trains running on more tracks in more places around the world. And the government debt problem isn't going to fix itself, and it is going global, and fiscal deficit spending by the rest of the world is accelerating faster than it is in the US. The end result is the purchasing power of fiat currencies is going to get killed in the years ahead, and there are growing signs that the problem is becoming more acute, not less. We need to protect our wealth over the long term by holding something they can't debase and steal, which is Bitcoin. And liquidity conditions are likely to be more positive now that QT has come to an end and the US government is stuck issuing T-bills over bonds, and the Trump administration, as we said before, has a strong incentive to run the economy hot to preserve the wealth effect leading up to the midterm elections. This Bitcoin price bounce is likely ends up being faded in the near term because we're still in a bearish trend, and the air pocket between 72k to 80k still needs to be respected as a bearish target, and we can see this in both technical profile and on-chain profile. And if we trade down there, the recovery bounce needs to be short and sharp. And the changes in the Bitcoin supply distribution over Christmas has been healthy, and we have rebalanced from a top-heavy 67% to a moderate 47% of the realized cap now has a cost basis above $95k, and the Bitcoin market is in a much less top-heavy state now. Short-term holder MVRV and short-term holder SOPR still look like the two dips that we have had in 2024 and 2025, and so as we see here, clearing 95k is a step one in a sustainable recovery, and then breaking short-term holder cost basis, which is at $98k, is a sign of strength for bullish momentum to return. And so we should be cautious of rallies until we have claimed a couple of these levels, 95k and 98k dollars. And futures markets are seeing a near-term short squeezes, but overall there isn't a huge amount of leverage in the system, so we're increasingly in a spot-driven market, which is good. Lighter is an Ethereum L2 focused on perpetual DEX, launched its native token LIT with a 25% airdrop to users. On comparisons, the market is actually valuing Lighter similarly to Hyperliquid currently at 2.7 billion FDV and $700 million circulating. Latter's float is 25.9%-ish, nearly identical to Hyperliquid's 25.4%, with their FDV at 24 billion and $6.1 billion circulating. Lighter is also trading on a fees multiple that is already in Hyperliquid's range, which is 26.6x FDV and annual fees, and 6.9x circulating annualized fees, versus Hyperliquid that is 29.9x and 7.6x, so quite similar. That's despite a large gap in absolute scale. Like Lighter has only printed $8.5 million in 30 days fees versus Hyperliquid $66.8 million fees. And Lighter's open interest is 1.45 billion versus 7.44 billion for Hyperliquid. So the real test will be whether Lighter can hold its volume lead after TGE, especially with many attributing its recent surge to points farming. And as it stands, Hyperliquid remains head of the PerpDex war. Despite the competition from Lighter, Paradex, and Asta, Hyperliquid's key metrics remained resilient. Monad turned 1 month old on Christmas, and in less than a month, Monad has accumulated over $400 million in stablecoins and over $200 million in TVL. The on-chain stats at the start of 2026 are looking good and can potentially be the year Monad accelerates even more. Masari shared their 2026 thesis for Monad that it could quietly show demand for new EVM block space with faster block times and decentralization. Two sectors that are primed for success are DeFi and consumer apps, and Monad's metrics may well trend upwards, and by the end of 2026, a healthy ecosystem could solidify on the network. We surely will pay attention to Monad and explore the apps in the ecosystem throughout the year. What sectors are you looking to explore on Monad? Let us know in the comments if you want us to cover specific Monad apps in the future episodes. Thanks for watching, guys, and I'll see you in the next one. Cheers.